Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Tuesday, September 28th, 2010, and like we do every night, it's time to look at the markets. Check it out. Okay, let's start off looking at the Dow Jones Industrial Average. We'll cover a lot of charts today, so let's get going. Today we had some weakness intraday at the start of the day as we had news coming out on the economic front showing that our economy is in recession, whether people want to admit it or not, and it's basically bad. So it drove prices down intraday and bounced back up, and we've closed to the upside again. Still following that exact same pattern we've been following for the past couple of weeks, ignoring the news and just trending higher on low volume. Okay, lots of guys out there giving all kinds of reasons for why, blaming it on the Fed, whatever. I don't really care. None of that really matters to me. It doesn't change the fact that it's unsustainable. Always go back to what is going to eventually happen, period. And whenever you do that, you conclude, wait a minute, this is unsustainable. It's a low volume rally on bad news. And the real news that was out this week and last and the week before was on the European credit crisis front. That is still getting worse, getting hotter, boiling over shortly. You'll notice today and yesterday we got news from Moody's and the S&P talking about downgrades in Ireland. This is still a major issue. When that tumbles, all the dominoes fall. And the main thing to point here, I think it's been long enough and far enough that we've seen this. Like I pointed out on yesterday's market analysis of the NASDAQ, we are duplicating the setup in the flash crash. The exact same conditions that we had prior to the flash crash are occurring now, only now they're worse. The volume behind the buying is worse. The gaps in the pattern are worse. If we want to continue to overextend, that's fine. They can do that. We've seen it in the flash crash. They can just keep on pushing and pushing. The main thing to remember, though, is how that thing fell. We did a whole article on it months ago talking about it would not only was it not only predictable, we talked about it before it happened back here that it was highly likely. We didn't expect it to happen in one day, but we did see a major crash coming. And here we're setting up the exact same thing. And a few months ago, we wrote an article about it, put it on our website, and said it was highly likely to happen again because of the volume. When the volume is decreasing back here in this rally before the flash crash, look at the size of the volume there, okay? You're at this kind of level, all right? Now look at the volume. It's even less, okay? The problem is not going to go away. It's a mathematical certainty. What's happening here is the higher she goes, the more sell signals she fights, the more confident the ridiculous retail bull gets. And they decided, oh, it doesn't matter what I do, everything goes up. I'm making money, haha. And it just keeps going and keeps going and keeps going. And that's the point. They're trying to lull you to sleep, make you get rid of the short positions, make you go long, make you get confident, cocky, whatever, and you keep buying and buying, and then you think to yourself, well, that's okay because I've got a stop loss limit. That's my secret weapon. And if she goes a little higher, and I've got a stop loss limit. And then the flash crash happens, and your stops are worthless. They don't even get you out in any way, shape, or form. So when the selling starts, either one or two things happen. You get left behind holding the bag, like you did back here, and like you did back here, or you are part of the flash crash, meaning all these stops get triggered at the same time. Everybody just falls apart like a little house of cards, okay? Main thing to note here, here's primary support, here's your secondary support, or your major and your minor. Everything you stack upon this is going to be erased, and you're going to take out this low with ease, and this one you will test. I don't think it'll hold anyway, but either way, you will be down here again. So whether you peak today or tomorrow doesn't really matter to me. What we did back here is we took a position, and we've been holding off for the past week, just kind of waiting for this market to get really overextended so we can add and average in at a better price on our short. The question of whether she falls is not a question, it's when. And that's what everybody's looking at, and I can't tell you that myself. So what I'm doing is the same thing we did back here in this one. You had the exact same setup, and we drew out a trend line. We said, okay, watch that trend line. When she starts getting pierced, that's the best indicator you're going to get. Even back here, you can't really see it because it's being covered up by all these little words, but you had about a week after it started being pierced. Notice the intraday activity fell below that level. Intraday activity fell below that level. Those are your early warning signs that she's about to snap, and then she did. And the very next day after she sold off, we said, okay, that was your peak. And then a couple days later, you get the flash crash. Okay, look at the same thing here. Intraday activity on the Dow Jones sold off, touched the trend line, and bounced back up. Didn't fill the gap here, didn't fill the gap here. Of course, didn't fill the gap here. So just keep an eye on this trend line. This is going to be paramount, very important to monitor that, okay? Okay, got somebody asking me about gold here. We told you a long time ago we cannot trade a bearish position on gold here because it's finding strength at this point right here, at this point right here, the same level, based on that Europe credit crisis, okay? That is still unfolding, still getting worse. Or that's what that news we're watching comes out. If you follow us on Facebook, you're getting those news articles that we post up there, and that's what's driving gold, okay? When a currency, a fiat currency is going to crumble, you're going to see gold act like this, all right? You cannot short it. At the same time, it's overextended. You've got major support here, minor support nowhere. So it's got a big drop on the table if and when it pulls back at any point in time. And it can do that at any time. So whenever the pullback comes, that's when you do your buying. Wait for that pullback to buy. Don't try to buy it now and chase it higher just because somebody else did. That's just never safe. It's never a good policy. Always wait for that pullback. Get yourself in a position what you were looking for. Just slow start, you hit the 20 line, then you can consider it from that point on. And again, as we've said repeatedly, every time we've looked at gold this year, we told you the same thing. Do not try to short it. Not in this environment. There's too many fundamentals that can drive euphoria into gold, so don't mess with that. Okay, looking here at the Hang Seng Index, this guy's same situation as all world markets right now that I monitor, from Europe to Canada, the U.S., they're all the same. If we just keep going higher, maybe the bears will go away. That's basically the game we're playing right here. The Hang Seng Index, the China Asia situation is better, as would be Canada, but Europe and the U.S., no way. That these two cannot sustain their chart patterns nor their fundamental issues. They're going to have to contract. So that's a matter of waiting here. I did get a bearish formation here as we pull back down and a continuation to the downside. She is overextended, as we talked about on all the charts you look at. They've bounced up here to the above the 80 line, so we are looking for pullbacks here. But thus far, nobody wants to give them up. We are also getting this major sell signals right there on the shooting star pattern. So all the signs are in place. It's just a matter of time. But keep an eye on that. Also, you do have some divergences here. We talked about these before, meaning price activity is well overextended where it should be. So you have the bearish divergence between here and here. And notice the slow stocks, which is the true tell of the momentum, is actually growing weaker right here. While low points still trading higher, that's a bearish setup. You look for this bounce as a shorting opportunity, as you expect price activity will fail and break down below this low point like it did right here. See here? Here's the low point corresponding to this low point. You had the advance, you had the pullback. The pullback fell lower than the previous low. This one did not. He should have done the same thing. So we're looking for that to happen. Okay? Okay, a quick look here at the FTSE London Financial Times Index. You're doing a little pattern like this right here, like you're going to make this little bull flag, okay, and then advance to here. The problem is every time Moody's and the S&P come out and they say, hey, we're downgrading, some one of those cruddy countries over there, it increases the odds of their failure, which they're going to fail regardless. You can't have that many possible failures and then one of them not actually blow up in your face. It's just not, the odds aren't in favor of that. Every time that they have to do these things, these austerity measures and so forth and so on, they crimp their economies. They're actually between a rock and a hard place where they can't really win, and it's just a matter of who blows up and when. So again, do not trust this chart in any way, shape, or form. You've already had the major sell signals right here with the shooting star patterns. Okay, you're above the slow stretch 80 line. The chart is already telling you don't play this game. Some people want to do that. It's up to them. Not for me. Okay, not a lot to add about the NASDAQ here. We did get the intraday pullback like we saw in the Dow Jones Industrial Average, forming the hanging man candlestick formation. It's not a bullish signal in any way, shape, or form. Just want to draw out the same trend line again. Just keep an eye on this guy. Again, when you draw the trend line out on this one, you'll notice we've already pierced today. Okay, we did not fill the gap all the way, but we did pierce it. Remember, piercing is an early warning sign that you're having a major issue and looking for it to fall apart. We've seen it before. We've talked about it before. You're seeing it again. Again, I cannot stress this enough. There is no reason to be a bull in this market. If your only reason to be a bull is prices going up, that's a problem that's going to burn you. We've seen it burn you before, right there, and it's going to happen again. Okay? Awesome. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. I'd also like to thank everybody for referring their friends, sharing our videos online, supporting this free service. That means a lot to me. Let's have a quick look at our disclaimer. The disclaimer, read it and weep. God bless, take care. Anybody who wants to register for our October trading course, swing trading course, you may do that. And anybody who registers or pre-registers gets the rest of this month for free. Hope to see you all there. God bless, and again, take care.